want you to think about how, if this day was bullish for you, say you had the benefit of knowing that through analysis you felt that this was going to go higher. Okay, if that's the case, this swing low here, first swing low in the importance after 130. This is really important. 130, I'm looking for swing highs and swing lows for the afternoon session. That's what I'm looking for. It's the same context that I use for the morning session. I'm looking for swing highs and swing lows prior to 8:30. I'm looking for the first one. Okay, I'm not needing to go back days and days and days. I'm just looking for the first one. It's not a complicated thing. But at 1:30, that's usually when I'm wanting to start trading in the afternoon. That's the earliest. But I'm preferably looking for a swing high and swing low to form at 1:30. Why 1:30? Because there's an algorithm macro that starts running at 1:30. That's beyond the scope of this mentorship, but just trust me, there is something going on that creates movement at 1:30 in the New York session, okay, in equity market. So when that occurs, all we're looking for, or what I'm looking for, is a swing high and a swing low. And then that same basis of looking for a stop hunt in the morning, like we described here, I'm looking for the same thing here. That's it, same thing. So now think about this. I'm thinking that these stops are in jeopardy because it's too clean. The level's too clean. Straight line edges in the market, they don't tend to stay like that. There's going to be a disruption. The market's been going higher, hasn't it? Yes. There's this pent up aggression that this market wants to go higher, but it's seeing short-term resistance here, here. It tried it a little bit here, and then retraced inside the lunch hour. The algorithm reserved the price run until later in the day. Now watch what happens. This swing low here gets violated right there. See that? That swing low gets violated right there. That small little stop hunt is all that's necessary. That will start what is called a buy program. A buy program is when the algorithms go into the process of spooling. Spooling is where it just continuously keeps offering higher prices. If it's a buy program, it just keeps offering higher prices. It does not matter what the volume is. It does not matter. And trust me when I tell you, if you go through the charts, you're going to see this. But these things tend to repeat. And if they repeat a majority of the time, not every day, but the majority of the time, if these things are in alignment, if they start showing the same fingerprints, it's probably going to pan out. And then you can start doing long entries and then hold for the close. Okay? So inside this area, the market creates a swing low, runs through this low, stop hunt. So the stops below here are what? Sell stops. Buy those sell stops. I know it feels scary, but go through your charts and you'll see many examples of this happening. It's the same thing that took place over here. Buy the sell stops that are resting below here and expect this level to be taken out. Consolidation through lunch. After 1:30 in the afternoon, wait for a swing low to be violated and then rally. What if you don't get a swing low that trades below it? What do you look for? Well, you look for a move higher that's sudden, displacement higher, then look for a fair value gap. If it trades back down to the fair value gap, you buy that. There's your two patterns. That's it. It's the only two patterns you need. Okay? You don't need breakers. You don't need an order block. See how easy that is? Very simple strategy. Very, very simple strategy. You have a trade one way or the other, and the logic has to be there for either one of them to form. So let's go over to NASDAQ, and here is 130. We have a swing low there, and it's basically almost the same low as that one. So what's happening here? What's that? It's trading down below it. See that? Look further to the left. What's that? Fair value gap. Man, it can't be that easy. It can't be that easy. These relative equal highs, what's above that? Buy side liquidity. Okay? Watch. I'm going to drop into a 1 minute chart at this low and this low here. What are those? They're relative equal lows. So that's going to be viewed as what? Support, retail support. And they're going to buy those little runs here. They're basically going to chase that. So if you look at this through the scope of below this level, there's sell stops. And you think it's going to go higher. Like I believed it was going to go higher today. I want to be buying those stops. All right, so say you're watching price, it's meandering through, and then all of a sudden, that swing low forms right there, and we have this low here, and then we have the sudden drop down. When you see that, if you're watching it on a 1 minute chart, that's going to look so dynamic, so aggressive. If you're zoomed in, it's going to feel like the floor has just dropped out. But that's exactly what you're looking for to buy. Right there. That low is the lowest candle. It rallies all the way up. Okay? And then right here, that was a close.